Good morning, everyone. This is Anne Marie. Today's Thursday, October the 11th, 2012, and we are looking at SPY. Now, yesterday I drew us an alternate ABCD pattern, and at the time it was coming into somewhere around this region. And I said, ideally, this would be the bounce point, but this shaded area means that price action could move all the way down here before we actually made ourselves a move. And indeed, that is what we've done. As a matter of fact, our line looks to be somewhere around this support region right here. It is bouncing quite significantly pre-market off of the dips after the close, and the low dip after the close looks like it was 142.75, just above this region right here, and this 100% rotation. Now, some folks argue in fib land that you must draw a fib that holds every bit from the tip of one wick to the tip of another. In the trading world, there's no such thing as must, other than you must manage your risk. Everything else is a shade of gray, and every rule is, using the old line from Pirates of the Caribbean, it's a pirate's code, just a list of guidelines, okay? There are no real rules in the market about things definitively doing one thing or another. And that troubles a lot of the newer traders, because you'd like to be in a place where you think the rules are available for you to use and will stand firm over time. Well, they don't. So if you have trouble with that level of flexibility, then it is an area that you can work on as a trader. That being said, let's walk through mechanics completely, what it is that we may see on the horizon. Now, the bounce here is pretty nice. It's got a pretty big gap as we come into the morning, but we are gapping into resistance. Frontline resistance in SPY today is 143.80-ish, right? 143.85. Somewhere around there. If we begin to fail that region and pull back, the second we lose 143.20, write these levels down, they'll help you. The second we lose 143.20, we should trouble ourselves to watch for the low in the aftermarket yesterday, 142.73, and in fact, we want to start looking at 142.60 because that's the base of an open gap that exists in SPY. Now, the market does not like to leave gaps unfilled, though they remain unfilled for some time at times. Most of the time, gaps are filled in, 3 to 5 days. We are running on a gap that is over a month old. So the longer this gap stays open, the longer it's likely to stay open, as unfortunate as that is. But the closer we get to that gap, the more likely it is that we try to test it. So what we could do is end up completely failing this level, coming down into this region, 142.60. We will bounce into this area of congestion, and then fail it, fall into the channel, bounce one more time, fill the channel, and then move on. But by then, we've got a 127.2 retracement event that could easily be on the horizon. All right, now I'm going to put this on pause because I want to show you another picture of something that might be on the horizon. Okay, this is what we have drawn here. A bullish Gartley. Now, the great thing about MotiveWave is that it doesn't, all you do is pull out the frame. I mean, certainly you need to know which harmonic it is, but you pull it out and just put the edges, and it'll tell you if it will hold the region. Now, here we have the XABCD leg, and notice it comes in right here to the top of the gap. patterns can sit inside of patterns, and they often replicate themselves. And right in here is an ABCD pattern, and right in here is an ABCD pattern. That's why the market's called fractal, because there are copies of itself within itself. All right, but that's just a little whatever on the side there. So we've got a couple of things that are looming around. I have no idea whether this pattern will hold or not. It just happens to be a pretty symmetric formation. Ultimately, again, I am bullish on the overall motion of the market, but we could be in a bit of a pullback event that might jockey around in here and end up pulling us lower before we go higher. All right, in the end, what we are looking at is our initial formation, and I'll bring that one right back up. We can see that what we've got going on here is, again, a retracement event here to the 100 mark. We should hold it. We should pop. Signs point to the fact that in this short-term region, the pop is into resistance. And so we're going to have to watch out for that a little bit. Notice this is a support region that has now become resistance. And so in between these spaces right here is currently where the SPY sits pre-market. All right. Good luck trading. If you get up over this 43.50, it should run into the resistance area, which it has. So the moment of truth is going to sit round and about here in the short order. In that short order area, we should be able to figure out, hey, listen, are we going to breach past this and try to come into the 50 or the 78.6 or something like that? Or are we going to fail it and move down? Always remember, if you take a breakout and it runs to the upside, but the wave action gives you a lower high before it starts reversing, you'd need to make a higher low in the next formation, or your premise that you're moving up is likely broken. All right, good luck today.